Okay. Good morning, everyone. I hope you've had a good week so far. Today is Thursday, and it's also the last episode for the week for the Market Snapshot series. Okay, so again, we'll be looking at the market is very mute, so we'll be looking at a continuation of where we left yesterday and covering what we think will be the highlight for the market this week and what to anticipate tomorrow and on Wednesday. I think it's Wednesday. On Wednesday, on 3rd of next month. So let's first look at what happened yesterday on the charts. And the first one is gold. So this one we've been following for the whole week, and it's just been taking its time within this range. And that's explainable because there is still, although there is weakness in the perceived weakness in the dollar, the market is still quite very uncertain because we have next week's meeting. So it being moved substantially in one direction is likely not going to happen unless on Friday we have something out of the ordinary, of which I don't think it's going to be the case. So what happened yesterday? We had our ranges here. So we had this zone we had marked and this lower zone we had marked, and basically there was an attempt to go higher. On the H4, it's much clearer. There was an attempt to go higher, and then we were taken back down again. So it seemed as though you're still uncertain about where to go. But the thing is, there's a very the risks are still not risks, but the dollar is still tilted to the upside. So there's a high likelihood. So hi guys, there's Angela. Yeah. So as I was saying, there's still potential for the dollar to go higher, and that's why you're seeing gold attempting to break higher. The reason being dollar weakness, perceived dollar weakness because of next week's meeting, which we covered extensively yesterday. Number two, fears in the banking sector. In as much as the Fed had that emergency line for regional banks to withdraw, it's still seen as a fear in the market, and this is also causing gold, actually yesterday but one, to spike higher. Having said that, most of the announcements, so let's just switch the markets before we go to these other charts. So most of the analysis in terms of fundamentals are pointing towards a weaker dollar. So that might be the theme, but I might say it might be either weak or sideways because it's still not quite clear what the Fed is going to do after next week's meeting. Okay, so let's start with the dollar. Two things to know. So this is an article on ING Bank. Okay, so the expectations for next week are already fully priced in. However, what's going to happen afterwards is what is keeping guys on their toes. So there's still ample room for speculation in the markets. That means usually by now people usually know, okay, data has been coming in positive, then the Fed after the next meeting is going to do this or it's going to do that. But there's still some sort of uncertainty because first the banking industry or the regional banks, and then also there's some sort of fear in the market, but I don't think it's founded. So here it's saying, in effect, this translates to a fully fledged fight to safety with the yen outperforming the dollar and gaining ground yesterday. So the whole banking thing is benefiting the yen in some way because of the flight to safety. And we saw yesterday on the AUD JPY chart, it was a very ideal chart to look for trends downwards, and USD JPY. So having said that, let's first check out this yen chart. Okay. So if you look at USD JPY, this channel we had drawn last week, so I didn't really cover it the past 2-3 days, but we were in a channel, and by the time you're drawing, you are somewhere around here, and it seems as though we are trending lower at the moment. So the thinking is, number one, the banking fears. Number two, there's some positivity in the Japanese economy, and we're going to look at that on the news. So in this case, we might be targeting to completely go to this supply zone over here. So that's a potential target if we continue in the same mood. Alternatively, if you are to start looking for bullish opportunities, then you definitely have to be sure first you've broken 134. So if there are signs of structure supporting or being sustained above the 134 level, so that's above this point over here. So this is 134. So if the market or price action confirms that we are staying above 134, then that's a good area to look for a bullish case. However, I'll be very cautious trying to be bullish on USD JPY, considering we've already, number one, you're already in a downtrend, and number two, there's still some imbalance to fill and some supply, a demand zone over here. Okay, so one more thing to add on to this whole Japan story is the fact that tomorrow we have the Bank of Japan talking. And one thing that's driving the market, so let me change this back to Japan, is this. So here, the labor union's biggest wage increase in decades has recently sparked market speculation about the BOJ policy normalization. So for BOJ, they employ a different kind of monetary policy tools to the other central banks, and this is usually under the bond market. So they usually do what we call yield curve control, which is, in a way, if you think about it, it's still like cutting interest rates some way, but I think that's a lengthier story for another day. So because we've had wage increases, and because, like, if you look at here, the services industry has sort of been stabilizing. So these are things that might lead to the Bank of Japan sort of to start talking about normalizing activities. Remember, for them, they were the opposite of what other central banks were doing. That is, they were still easing because of their debt rather than tightening like other central banks. So if this is any clear indicator that we might see a change, then on the longer time frame, so if I was to come back to USD Japanese yen, on the longer time frame, this should be a downtrend in the longer run. Because remember last year what happened? We went all the way till 150, and now we're coming back lower. So if the current news is anything to go by, then we should see downwards pressures continue. However, USD JPY, USD might not be the most ideal pair for this. You'd be looking to pair Japanese yen with something else, for example, AUD JPY. And this is where it becomes very obvious it's a downtrend. If you're to see yesterday's announcement on Australian dollar, here, remember yesterday we had a CPI report on Australian dollar, and what happened? The expectations or the inflation came within or in line around there with the inflation expectations. And we said the Reserve Bank of Australia people are either debating it's going to pause or completely halt. And because inflation has come in line with expectations, then chances are we might see a halt in hikes. A halt meaning they're going to stop raising interest rates. And that was clearer here. So that means that AUD, or that explains the downtrend in Australian dollar at the moment. So if you're looking for something interesting to follow fundamentally and also technically, if you want to trade, then these two are going to be a very good combination, AUD and JPY. So yesterday we had some sort of recovery, or actually this is today morning, we had some recovery, but pressures are still tilted that you might be going lower. You don't have to, no, I would like to get your help. Okay, so if you are in any of the towns, you can always visit any of the FX Pesa offices. In Nairobi, we have in Westlands, Thika, Kitengela, and Isili. And then you also have offices in Nakuru and Eldoret. So you can get in touch, or you can even go there physically. So it's easier to sort of get one-on-one sessions and also attend the class to see what other guys are doing. Okay, so now we know that Australian Japanese yen, AUD JPY, is a good pair to start with. Another good pair to look at when you're trying to trend trade, if your strategy is trend trading, is AUD Swiss franc. So here we had, this was yesterday when I didn't really do analysis on this chart in terms of technicals, but it was very straightforward that we are indeed in a downtrend. Right now we have some sort of correction, but things haven't changed fundamentally. So this is actually an opportunity to see where can you look for reversals on shorter time frame trends. So in this case, if you're to go to the 15 minutes or 30 minutes or H1, just look at market structure or whatever strategy it is that you can use to trade, because fundamentally things are still pointing that you might be going lower, at least the next week or so. Okay, so let's go back to our charts. Sorry, the news, and see what else we have. Okay, so we've covered USD. We know that for dollar, we might expect some weakness. We've covered Japanese yen, and we've talked a bit about the banks, and we've covered Australian dollar. So just to add on to that, the other thing is Euro USD. So here they're saying narrow rate differential. Okay, so usually you have this market of swaps where interest rates between different central banks can be traded. So the thinking right now is over time, we might see interest rates from the ECB or from the European side being higher than interest rates in the US economy, because still it seems as though things are normalizing in the US and they're not yet normalizing in Europe. So you might see ECB keeping higher rates for longer than in the US with the Fed. So having said that, this is supporting a bullish case for Euro USD. So this is a long-term view, of which if you look at the chart, so if you look at the chart for Euro USD, we've been attempting to go higher, although yesterday we failed again. So this is the chart for Euro USD. On the 4-hour, you have this upwards channel. Yesterday, we had this attempt to go higher, we failed. But since you're still bullish, anyone trading technicals or supply and demand, wouldn't have attempted to sell over here, because we still know that fundamentally, you're still likely going to push higher. So this was a zone that I was still watching out on, but again, we have the potential to go higher. If at all we go lower, then this level is what I'll be looking at, or at least a break in structure here. So if you're to break this swing low and we go lower, then that's when probably I'd start thinking of looking for selling opportunities. Remember, there's this imbalance here, this whole upwards move that needs to be balanced. And then you have a small, actually a big demand zone over here. So this section might be of interest to prices if at all it was to come back down. However, fundamentally, we're still looking to go higher. Okay, so that's that. Let's see what else is in the news. Okay, for pound, things are as is. We have room to go higher. So a lot of these things are caused generally by the expectation that the Fed is going to be less hawkish, or at least it won't be as aggressive from next week. That's the assumption. So the assumption is we might have general dollar weakness. In as much, in my view, usually this means one of two things: looking for opportunities when, for example, if I start seeing the dollar strengthening dramatically, I can look for opportunities to check reversal, trade ideas from there. That's one way to look at it. The other way is to trade a continuation in the trends. The current trends in the market are the way they are because of that expectation, unless something out of the ordinary happens between now and the meeting. Okay. So yeah, so most of the analysis in terms of fundamentals is the same. USD bearish for now because of what you said. Euro bullish because of the interest rates. And then lastly, GBP USD seems to have failed to break. We'll have a look at that. Okay, and then for pound, no domestic drivers. This means there are no fundamental drivers at the moment, but the view is bullish. So most of the analysts fundamentally are touting that it might go higher. So let's look at that pound USD. Is it pound USD chart? So if you have any chart you want us to look at, also you can just share on the chat section so that we can quickly cover it and see if there's anything interesting we can try with it. So I'll just overwrite these charts instead. Just a minute. Okay. So this is pound USD. Let's see what is happening on the daily. Okay. So on the daily, let me see. Yeah, I think the weekly is giving a clearer picture. So on the weekly, the previous high was here. Yeah. Just put it like that. So that's 1.24391. Can it be rounded off? I think it can. So I'll put that at 1.23244. Yeah. Okay. So we are still attempting to go higher, which is not a surprise because we are still, the momentum is still weekly bullish. It's bullish, yes, but very weak. And then on the daily, okay. So just a minute on the H4. Okay. Yeah. So on the daily again, we have this area over here. That was our most previous swing high. So usually when I'm marking supports and resistance, I usually just look at when was the last upwards push before we failed to break higher, of which I think it's this one, not that one. It should be this one. And what was the most recent lowest low before market structure began to misbehave? And in that case, it's this one. Yeah, so we have this range up, we have this range down. Then second, we have this very sharp supply, this sharp selling. So I can point this as a supply zone. So I'll just highlight that as such, like that. So you can make this, you can refine this by going to lower time frames to see where exactly it's at. And then on the lower end, it's looking very unstable. So I'll just leave it to that. So you're saying 70 failed to break 78.6. So breaking it lower or okay, let's see. So for Peter, is it breaking it lower like this, where we are going higher? Or maybe that's a question I'd want you to clarify. So in the meantime, I can just remove that. Okay, so my thoughts on this, because you're tilted to the upside, I might actually want to see how we behave. Yeah, so I might actually want to see how we behave if at all we're going to see market structure going higher. So in this case, I'll just look for confirmations, honestly, because here you have the most recent high like that, but I'd also be wanting to see, are we going to fill this imbalance? So in the case, or to the downside, so you're trying to be bearish on pound USD. Okay, so if we at all you're going higher, then I'd want to see how the price behaves in the event of a pullback. So in that case, I'd want to see if we go lower past this, there's an imbalance here. So if you're trading balances and imbalances, you'll know that sometimes the market needs to pull back a bit, fill out an imbalance, and then head higher. So in this case, I'd want to see if you're going to get past this, specifically if you're going to get all the way past this, then that's when I'll become bearish. But I don't think we have a very strong bearish case in this period. We might just be trending sideways because of what we've said, because of the fundamentals. We are waiting for what is going to happen next week. And number two, there's a lot of reasons to believe the dollar is going to weaken in the market. So in my opinion, if I'm at all going to be bearish, first off, we have a market, a mini trend upwards, but I'd want to see how price is going to behave around these levels here. But it's very unlikely that we might see any sustained move lower. And if it does, then those are, in my opinion, opportunities to look for where to go long. Okay. So the other one is Brent crude. So let me see. UK oil. Okay. I remember we had something on this. Oh yeah, it filled the gap finally. So now okay, let's see what we can get. Just a minute. Because this one I've not checked on it fundamentally, so I can't really comment on the direction. Okay. So first, let me see if I still have the other chart with me. So just a minute. So UK oil is over here. So yeah, we marked UK oil. Okay, so this was the analysis we did the other time with UK oil. We say that because of this imbalance, price has to first fill this area. And the other target that we had marked the other time was we had this demand zone over here. So if price is indeed coming to fill this demand zone, then we might see some stabilization, because I don't believe oil trends strongly unless there is a very good reason for oil to trend. Yeah, and I think from here chances are we'll start seeing signs of either a sideways continuation until there's something clear, because oil is always sideways trending until there's some sort of news that's going to push it for a few months or a few weeks. So in this case, we fill this gap, we came back to this supply zone. So I'd be looking, in my opinion, for changes in market structure to suggest that we might be going higher, at least for the shorter term. So that's my opinion on oil at the moment. When it comes to fundamentals, I don't think there's any strong driver right now that we wouldn't have picked up. But yeah, most of the analysis is on the gap that it made the previous time. So way up until this point, we need to see more news, strong news, to know what to do next. So, and by strong news, usually have to, when you're going through news, you need to know what's important and what's not. A lot of the things that are put out every day are usually not really important. So unless there is something really solid or concrete that's going to drive the market, and that is usually based on experience and how many guys are talking about it, that will make you know that this is definitely going to impact the market. So until we have some sort of clear direction on this, I'd say we'll just feel this imbalance, probably this sharp downwards move, and then from here we'll be waiting to know that what the next direction is, because that's on oil. Okay. Earnings. So yes, earnings are supposed to be today. Today you have Microsoft. Is it Microsoft? No, Microsoft was the other day. Let's look at the earnings calendar. Okay. Yeah, so earnings have been positive of late, and that's good news to the market. Yeah, it's providing some reprieve from all the negativity with the central bank sectors. So in this case, let's see, we have Thursday, we have Amazon, MasterCard. So these are the, we should expect improvement generally, because that's what has been happening. You're also expecting a lot of tech companies today, Intel. So let me just zoom this in. Yeah, so far so good with earnings, and that's a very good indicator, especially in the markets. Actually, we should look at Nasdaq. I think I should have closed this before. But anyway, so on Nasdaq, this is what we have. Yeah, so on the daily, we still have this support area. I think it's on the other chart, but we have this area over here that we are looking at all the way from last week. Yeah, and because earnings have been very positive, then Nasdaq is going to be, at least it's going to be having some positive sentiment that is going to support it. So having said that, we're still waiting for, let's see the list of, because today you have a lot of tech companies coming to announce their earnings. Generally, I expect things to be good. Yeah. And the fears we had on Monday and Tuesday are going to be abated. That means I think we might just see the whole flight to safety thing being calmed down. And having said that, we should expect it's still sideways. Should expect some sideways movement until we know, or if you are to be bearish at all, then it won't be a strong bearish trend. And that's why yesterday during our analysis session or trading session at the class, we were very skeptical about that huge down move that came at around 4. So anyway, so in this case, let's wait and see. But before Wednesday, anything that's dramatic or any price movement that's dramatic on Nasdaq is probably unfounded. Yeah, unless there's a good reason to say that we are dropping because of XYZ. Usually it's unfounded fear or something like that, that usually makes a very good opportunity for trading reversals, unless there's something solid in the market that's happening. Okay, so having said that, let's wait and see how things are going to unfold today. For tomorrow, it's the BOJ, and then this core PCE index, which we said the only time it's going to impact the market is if it's something substantially different from 0.3%. If it's going to be a very big margin, otherwise we don't expect a lot of impact from that. The SNB is also coming up. Again, I think the message is going to be the same. We shouldn't expect any surprises from there. And having said that, thanks for attending today's session. If you have any further questions, there's always our socials, Twitter, TikTok, Instagram, YouTube, and you can go to the offices also for queries. So enjoy the rest of your trading day. Make sure to use your risk management at all times also, and also always do your own analysis before you decide that something makes sense for you. Okay, I believe I've covered all the questions. Pound, crude oil, yeah, and the earnings. So enjoy the rest of your day and happy hunting. Please marry earnings. Oh, okay. Please marry earnings to interest rates. If the rates will sustain, I expect weakness in stocks. Okay. So at the moment, okay. Let me answer those ones before you leave. At the moment, the market is currently okay. Like we have upbeat earnings. So far, so good. That means it's providing a reprieve with the Fed that the economy is doing well. And that's building onto the case that the Fed might start being less aggressive, might start adopting a less aggressive tone in the markets. And that means it's positive for stocks, and it's providing some bearish backdrop for Euro USD. That means anything paired with the dollar on the second side of that pair looks likely to be bullish. That's why yesterday, any unfounded moves lower with stocks, there were some opportunities to get in, and that's the basis of the entire analysis we've done today, is that we might, let me go back to today's charts. So the whole thing, everything I've been saying today is based on that fact that things are looking up, and we might continue seeing weakness in the dollar and strength in pairs that are against the dollar. For example, euro, a pound, and all those things, as you can see at the moment. That's why even I said this was a good shorting opportunity yesterday, but it wasn't very wise because the fundamentals are against it. So I believe that covers your question. Focused on it's not really a forecast, but on Australian dollar, again, yesterday we've covered CPI. CPI was yesterday, and it cleared for us that we might see the Reserve Bank of Australia holding rates, and that's very bearish, not very, but it's bearish for Australian dollar. Having said that, we said a good pair to pay it against with is either Swiss franc or Japanese yen. Again, if you have time, you can just go through the video after we've ended the stream. Okay. I believe those questions are covered, and I'd like to end there for today. And yeah, happy trading. See you, I think, the next session that we're going to have together. Okay.